Alrighty guys, we're back with another real estate lingo video. We did the basic real estate terms and now we're on to the mortgage and loan terms. So we're just going to dive right into it and give y'all some knowledge.
All right, so the first word we're going to be talking about is pre-approval. This is basically the first step in the mortgage process. It's basically the lender figuring out our financial status and how much home we can shop for, just so we're not shopping for homes that are out of our budget.
The next term is often confused with the pre-approval. This is actually a pre-qualification. So sometimes buyers come to us and they think they're pre-approved because they have a pre-qualification letter, which is actually not the same thing. This is kind of just an estimate. So when they do a pre-approval, they actually run your taxes, run your income, and it's actually saying you can afford this much. A pre-qual is just kind of getting your foot in the door and getting an estimate. So make sure you don't confuse the two. If you're pre-approved, you're ready to buy.
So the next term is down payment. This is the amount that we're going to put down on the home. This varies from mortgage to mortgage. For example, with an FHA loan, if you're a first-time home buyer, you're going to be putting down 3.5%. With a conventional loan, it can be anywhere from 5% to 20%. That's just kind of a range. But if you'd like to put down more, you always can.
So a common term you might hear in the mortgage process is DTI. This is debt to income ratio. This is basically the lender looking at how much debt you have compared to the income you have coming in. So it's just another key indicator on how much home you can afford. So even if you make $1 million a year, but you're paying on a Rolex, you're paying on 5 car payments, and you just have a lot of debt, you're not gonna be able to afford the amount of mortgage that you would like because there's not enough income to cover all this debt that you have.
All right, so now we have our loan amount. This is the amount that's being financed. So this is sales price less your down payment. This is what equals your loan amount.
So a term you'll hear very often in the mortgage process is appraisal. So this is where they come in and make sure that the home is worth what they're gonna lend you for the home, basically. So this is a bunch of data gathered, like the location of the home, market trends, the home amenities, as well as other homes that have sold in the area recently. So all these things together compiled make the appraised value of a home. And so the main reason why an appraisal is so important is because we don't want you paying more for a home than what it's actually worth. So that's an important part of the lending process.
All right, guys, we hope y'all enjoyed this video and that maybe y'all learned something new. Stay tuned for part 3, which is gonna be over offer terms, which is a pretty exciting area of real estate.
That's where it gets fun.
So y'all stay tuned for that. We'll see you in the next video. Thanks for watching.